Getting into the world of mortgages can feel, well, pretty overwhelming. There are so many moving parts. But what if I told you there's a rule book, a guide that's written specifically to protect you and make sure you get a fair shake? That's exactly what these key federal mortgage laws are. So let's crack open this rulebook and see what's inside.
So when you're making one of the biggest financial decisions of your life, what's really going on behind the scenes to protect you? Turns out, there's a whole collection of regulations working on your behalf. We're going to break down the most important ones, chapter by chapter. All right, first up, Chapter 1. This is the foundation of it all, really. The core principle that everyone, and I mean everyone, deserves a fair shot. These are the big landmark laws designed to make sure lending decisions are based on your finances, not on prejudice. And the cornerstone of this chapter, it's the Equal Credit Opportunity Act, or ECO. Its mission is actually pretty simple, but it is so powerful. It says that no creditor can discriminate against you for any part of a credit deal. From the second you apply to the final terms you get, the decision has to be about your qualifications and nothing else. And this is where the law gets really specific. ECOA spells out exactly what lenders can't use against you. Take a look at these protected classes. It's illegal to discriminate based on any of this. So the fact that you're single, or that you're older, or that you receive income from public assistance like Social Security, none of that can be a factor. It's all about your creditworthiness, period. Now, ECOA isn't out there fighting alone. It's got a partner, the Fair Housing Act. This little table is a great way to see how they work together. Think of it like this. ECOA covers the credit part, the loan itself. The Fair Housing Act covers the entire housing transaction, renting, buying, the whole deal. And you can see they protect a lot of the same groups. But the Fair Housing Act adds crucial protections for familial status and disability. Together, they're a powerful 1-2 punch against discrimination. And rounding out this first chapter is the Community Reinvestment Act. This law tackles fairness from a different angle. It basically says to banks, hey, you can't just serve the wealthiest neighborhoods and ignore everyone else. It really pushes them to lend to and invest in their entire community, making sure that people in lower income areas have fair access to credit too. Okay, let's turn the page to Chapter 2. A fair deal isn't just about preventing discrimination, it's also about transparency. This part of the rulebook is all about your right to know, making sure you have clear, honest information so you can make the best possible decisions. So, how do we actually know if lenders are playing by the rules? Well, that's where the Home Mortgage Disclosure Act, or HMDA, comes in. It creates accountability. It forces lenders to report demographic data on every applicant, things like race and sex. All this info goes into what's called a loan application register. Then, regulators can dig through that data to hunt for any suspicious patterns that might point to discrimination. Now, this one is huge. Your credit report is one of the most important pieces of your mortgage application. But what happens if it's wrong? The Fair Credit Reporting Act gives you the power to fight back, and it's a simple 3-step process. First, you dispute the mistake. Second, the credit agency has to investigate it. And third, if it's wrong, they have to fix it, usually within 30 days. The big takeaway here? Don't just assume your credit report is perfect. Check it, and if you find a mistake, use your rights. It could literally save you thousands of dollars. Transparency also means protecting you from being misled. That's where these 2 rules come in. The MAP rule is all about advertising. It makes sure that flashy ad for a super low rate isn't hiding some nasty surprise in the fine print. Then you have the MARS rule. This one protects homeowners who are in trouble from getting scammed. It makes it illegal for these so-called relief companies to charge you a fee until they've actually gotten you a written offer from your lender that you accept. No more paying for empty promises. And here's a law that can put money directly back into your pocket. Let's talk about private mortgage insurance, or PMI. That's that extra fee you often have to pay if you have a smaller down payment. Well, the Homeowners Protection Act gives you an escape hatch. Once your loan-to-value ratio hits 80%, which means you officially have 20% equity in your home, this law gives you the right to call up your lender and ask them to cancel your PMI payments. That's real savings every single month. All right, on to our final chapter. And this one brings us right into the modern world of digital data and, believe it or not, national security. These laws are all about protecting your personal information and making sure the entire financial system stays safe and secure. First up, your privacy. The Gramm-Leach-Bliley Act is the big one here, and it forces financial institutions to explain how they share and protect your data. But it makes this interesting distinction between a consumer and a customer. A consumer is someone who does a one-time thing, like cashing a check at a bank where you don't have an account. A customer, that's you with your mortgage, has an ongoing relationship. And that customer status means you get stronger protections and regular privacy notices. The Rulebook also gives you direct control over how companies interact with you. We've all heard of the National Do Not Call Registry, right? Well, that's part of this whole system. It puts you in charge of who gets to call you. In a similar way, the e-Sign Act puts you in charge of your documents. It says electronic signatures are totally legit, but a company can't just force you to go paperless. You have to give them your clear, explicit consent first. And now, we're going to take a pretty sharp turn, because these rules aren't just about protecting you as a consumer. They're about something much, much bigger. Your bank, your lender, they're actually on the front lines of protecting the country's financial security. This is where the Bank Secrecy Act comes into play. Its main job is to prevent criminals from using the banking system to launder money. This is the reason why banks have to file a report for any transaction that seems suspicious and for any cash transaction over $10,000. It's all about creating a paper trail to stop illegal cash from flowing through the system. And building right on top of that, the U.S. Patriot Act requires every financial institution to have what's called a customer identification program. This is why every time you apply for a loan or open an account, they absolutely have to collect and verify these 4 things: your name, birth date, address, and a government ID number like your social security number. It's not just the bank being nosy, it's federal law. It's about verifying you are who you say you are to protect the entire system. So there you have it. From fighting for a fair shot to ensuring you get the truth to protecting your private data and even national security, this rulebook is a powerful set of tools designed to work for you. It's more than just a bunch of regulations. It's a declaration of your rights. The rulebook is there to protect you. The only question is, now that you know what's in it, are you using it?